Currency markets were absolutely alive yesterday, particularly the Japanese yen. A roller coaster ride, weakening substantially after the Bank of Japan refrained from making any change to its yield curve control policy, but then snapping back and strengthening against the other dollar all over the place. So the inner trader in me loved some of the price action. You go and get an insight as to whether it's likely to continue. We welcome back to the program Nick Twidale from FB Markets, who is standing by in our Barangaroo studios. Nick, quite the wild ride again for the old Japanese yen.
It was crazy, wasn't it? It was wild and whippy. Yeah, the yen was all over the place. I think we started nicely under 130, 129 even, and then it just went one way. We were waiting for that BOJ. That came out. The yen got smashed. Dollar flew up to sort of 130, 160 highs, and then we were sort of waiting to see what came out from the press conference, and then it got smashed again. And that started off a really volatile period, or a really volatile couple of sessions. So the rest of the majors picked up where the yen started off, and we saw some really whippy moves across euro, across sterling. The local battler jumped in on the game as well. So yeah, great from a volatility point of view, but from a trend point of view, I'm not so sure. I think we're still a little bit clueless at the moment. We need a little bit of certainty from central banks and from data. And yesterday from the Fed, I think we got sort of weaker data, but then we came out with Fed officials still sticking to their guns on a more hawkish outlook, and that saw the dollar come flying back in the late US session. So, mate, yeah, great for volatility. I'm not so sure for any trend followers though.
All right, mate. Well, let's go and strip out all the noise and uncertainty, just get straight to the charts, because they tell a story often themselves. So we'll kick off with the Japanese yen if we could, and maybe going to zoom out as well at one point. Let's go and have a look at how the other technical setup is at the moment. We know that the dollar yen has really been coming off hard. What's the chart saying from here?
So, I mean, it was interesting yesterday. It's like, when you've got these massive fundamental changes coming in, but that's the daily chart, and it did top out really nicely on that top side resistance, and that's where there was obviously a little bit of supply around that area, a few people coming in. We know exporters were sort of selling yen and yen crosses on that spike up, and as you can see, I said it peaked out around 130, 3160, and that chart comes in because it's the daily. It's a little bit further away. I think it's up near 132.40. But now we're back, we're back 4 big figures lower, or 3 big figures lower, I should say. Like really vicious moves. But I think you have to be patient in these markets and wait for those big technical levels, and trade. I think trade with a sharp mind on. So get some of your profits in, run your trailing stop losses for those guys that are trading intraday. You can't afford to just sit and wait for a trend, because it is reversing very, very quickly.
Let's go and talk to Battler, because last night when I was toddling off to bed, it was trading about 70.70 against the greenback, and I woke up this morning, it was trading at 69.30. Quite the range. And not really anything going to explain it.
We were obviously having our cocoa about the same time. I was like, oh, it's gone back up, and same thing. I mean, most of that move was really from the dollar. I think even last time we were discussing the Aussie, it is a buy on dip scenario for the Aussie at the moment. Like since we hit those lows back in October, it has come in nicely. It's a buy and dip situation, but yeah, the dollar move was really what influenced what we saw. Obviously, those big moves in dollar yen, they do affect the other currencies as well, to a lesser extent. But then once we hit that US session and we started to get some real indication on what was going on in the big dollar, that's what moved the Aussie. And as I said, sort of worse than expected data out the US, that led to some quite aggressive selling. But then the Fed coming in, and this is where we're getting an interesting setup with the Fed and with other central banks as well. You could even argue the BOJ to a certain extent, is that they're still very, very wary, like the Fed in particular is very, very wary of inflation. So they want to get that under control first before there's any sort of real lessening on that tightening, and that's what we've seen in the market. And as you can see now, look, we're 150 points lower from where you and I were getting our rest last night.
Yeah, absolutely. So who knows where we're going, but for the moment, the Aussies definitely respecting those trend lines there. So keep a close eye on it. It reminds me a lot of the chart, the S&P 500 at the moment, that distribution, the supply that's coming through at that top-down resistance. Let's go and finish off, though, having a chat about the British pound, because when you look at a macro backdrop at the moment, nothing quite looks as tricky as the UK economy right now. You've got half the nation seemingly on strike. You've got inflationary pressures strong. Wage pressures are already there, and so many people looking for higher wages too. The Bank of England's anticipated to continue being pretty aggressive for the time being. The British pound has been all over the shop.
It has, and it's exactly that sort of difficulty that you've got between the central bank and what they're seeing in the economy. It's the same thing, and it's probably even showing up much better in the sterling than it is in the dollar. I mean, that move, you know, we have got that wage pressure coming through still, but as you said, you've got people on strike, you've got a clear recession like coming through, but they've still got to keep inflation under pressure, and that's the same across this Western world. And I suppose, you know, we've probably discussed it before, when you take a bigger view on what's gone on over the last few years, central banks have probably been sitting on their heels, or let's be honest, they have been sitting on their heels for far too long, and now they're reacting, and we're seeing a completely different market to what we would usually expect from them. But cable's a great trade at the moment, and going back to what we were talking about before, if you're trading cable, you've got to be able to get in and get out very quickly, but we are getting some massive moves, so it's very attractive for traders out there. I think the real issue is, like, you speak to people on desks at the moment, and you speak to the strategists, it is very hard to call the next 5 big figures over the next month. Like, there's a very good reason for it to go down, very good reason for it to go up. You've got to trade what you see in these markets, and be patient and wait for those technical levels.
You have a lot of good conversations with people who go and follow the FX markets really closely on a day-to-day basis. Just to go finish off, the greenback, how does this stand? What's the general sentiment out there at the moment? I know the Bank of America Merrill Lynch Fund Manager survey said that still being long dollar was perceived to be the most crowded trade at the moment. We're seeing a big unwind of those longs already at this point in time. What's general sentiment as to how it goes from here?
I think that's coming through, and you know, even today, I spoke, the first point is I spoke to guys this morning and gave it the odd any ideas, and it was like, no. I think we've hit that level where there's been a decent amount of unwinding, and the big players in the market are really looking to see where we get the next trend from, and I think that comes through in the charts we've just looked at and how volatile they are, and liquidity is definitely thinning a bit as well. So I think from an interest rate differential point of view, which is obviously what we've been talking about to the greater extent today, then we're looking for a clear direction. We're looking for it from the Fed for the majors and the dollar, and from other central banks. I think we may have started to see a little bit more interest in dollar coming back, especially if you then take it as a safe haven play, and we're going to see more recessionary conditions around the world. So it does feel like things are going to get a lot messier before they get clearer. But you might start to see that demand for the dollar not come from the Fed looking to be more hawkish, but maybe as a safe haven trade if we do start to see more downside for risk trades in the market. So as usual, there's a few things going on, and we've just got to try and add up which ones are going to really supersede the other and give us that trend that we're looking for.